Good morning, teacher. My name is Xiomara Rajo Chamorro, and today we are going to present an analysis of Interbank. Interbank is one of the most important financial institutions in Peru. Interbank was established in 1897. Currently, it's a key member of the Intercorp Group. The bank is widely recognized for its modern approach and its focus on being accessible to all customers through its branches and digital channels. Now, let's look at Interbank institutional purpose. Their mission is to help Peruvians achieve their goals. They focus on providing financial solutions that improve the quality of life for their clients. By doing this, they help families and small businesses grow, which creates a positive impact of our society. Their vision is to be the best bank by having the best people. This means they prioritize talents and positive internal culture. They believe that if the staff is professional and empathetic, the service will be excellent. For our market research, we focus on two types of competitors. The direct competitors are big banks like BCP and BBVA. They offer the same traditional service, loans, credit cards, and saving accounts through a wide network of physical branches and digital apps across the country. In the case of indirect competitors, this includes municipal banks like Caja Huancayo or Caja Arequipa, and digital payments app like Yape or Plin. These companies don't operate as full-service bank, but they are very popular. Municipal banks focus on microloans and personal savings for local entrepreneurs, while apps like Yape and Plin have changed the way people make daily payments and transfer instantly from their phones without visiting a bank branch.
Hi, I'm Adriana Rios Ampuero, and now I will present the SWOT analysis of Interbank. I will start explaining the strengths. First, Interbank has well-developed digital platforms such as mobile banking and Tunki. These platforms make financial service more accessible and convenient for customers. Second, the bank has strong connections with Intercorp companies, which increases customers' reach and creates synergies with other businesses. Another strength is that Interbank offers modern branch formats like Explora, designed to improve customers' experience and make banking more dynamic and friendly. A first weakness is that Interbank's operations are mainly focused in Peru, with little international expansion. Second weakness is the heavy reliance on technology, which can be risky if systems fail. And another weakness is the dependence on retail alliances to attract and retain clients. Now, opportunities. First opportunity is the increasing demand for digital bank and fintech service. Another opportunity is the potential to create new partnerships and loyalty programs. And another opportunity comes from government initiatives that support financial inclusion. And finally, the threats. First threat is the strong competition from BCP, BBVA, and Scotiabank. Second threat is the economic uncertainty in Peru, which affects customers' trust. And another threat is the regulatory change in the financial sector. Now I will explain the best analysis of Interbank. Let's start with the political factors. Stricter regulation in the short term with a new president, uncertainty in the medium term from elections, and positive opportunities in the long term from trade agreements. Economic factors include currency fluctuations with negative impact in the short term, interest rate increases with negative impact in the medium term, and economic growth with positive impact in the long term. Social factors include financial inclusion programs with positive impact in the medium term, generational change with positive impact in the short term, and lifestyle changes with positive impact in the long term. Finally, technological factors include automations and AI with very positive impact, fintech partnerships with positive medium-term impact, and cybersecurity risks with very negative short-term impact.
Hello, my name is Wilmer Jose Naupa Cabrera. Next, we will look at the following topic: Porter's Five Forces Analysis, threat of new entrants low. The sector faces high barriers due to strict SBS regulations. In addition, the heavy capital requirements mandated by Basel III effectively block small startups from entering the traditional banking space. Interbank leverage its deep-rooted brand trust and massive economies of scale to maintain its dominance. Moreover, its exclusive integration with the Intracorp conglomerate creates a closed ecosystem that keeps potential competitors locked out of key retail touchpoints. Bargaining power of suppliers low. It is number 2. Capital providers such as retail depositors are highly fragmented and lack the power to negotiate individual rates. Since deposits yields are primarily dictated by BCRP guidelines, suppliers have virtually no influence over interbanks' costs of funds. On the technical side, the market for software and cloud vendors is vast and highly competitive. This allows Interbank to easily renegotiate or replace suppliers, ensuring the bank remains insulated from dependency on any single technology partner. Number 3. Bargaining power of buyers medium high. Nowadays, digital banking allows customers to compare interest rates and fees instantly, reducing loyalty because basic financial products are often viewed as identical. Customers can easily switch to a competitors if they find better financial terms. To counter this, Interbank creates lock-in effects by tying its services to the Intercorp ecosystem by offering exclusive discounts at partnered retailers. The bank increases the perceived cost of living, shifting the focus from financial terms to lifestyle benefits. Number 4. Threat of substitutes medium high. Currently, fintech startup, digital wallets, and the country's massive informal cash economy offer quick and easy alternatives to traditional banking. These substitutes often target the unbanked, bypassing formal requirements entirely. Interbank actively mitigates this by outsourcing disruptive technology into its own operations through initiatives like the Plin Payment Network and the Tunki app. The bank transforms potential substitutes into exclusive digital channels to attract and retain customers. Number 5. Intensity of competitive rivalry high. The Peruvian banking market is a tight oligopoly dominated by four mayors bank because financial products are largely homogeneous. These institutions are engaged in constant price and marketing battles for the same top tier clients. This rivalry pushes Interbank to prioritize continuous innovation over static margins. The competition has shifted from physical branches to digital interfaces, where Interbank must constantly outperform its rivals to secure digital real estate on the customer's phone. Now we will look at the marketing mix. The marketing mix is a strategic framework that consists of a set of controllable variables that organizations use to develop, position, and market their products or services. Its main objective is to satisfy customer needs while achieving the company's marketing and business goals. Originally based on the 4 Ps, the models was later expanded to the 7 Ps to better address the characteristics of service industries by adding people, process, and physical evidence. The 7 Ps of the marketing mix. Number 1, products. The good of service offered to satisfy customer needs. It includes quality, design, features, branding, packaging, and warranty. Number 2, price. The amount customers pay for a product or service. It includes pricing, strategies, discounts, financial options, and payment terms. Number 3, place. The distribution channels through which products or services reach customers. It includes logistics, transportation, warehousing, and points of sale. Number 4, promotion. Communication activities used to inform, persuade, and remind customer about a company's products or services. Number 5, people, employees, and everyone involved in delivering the products or service. Their skills, attitude, and customer service significantly influence the customer's experience. Number 6, process. The procedures and workflows used to deliver products or services efficiently and consistently. Number 7, physical evidence. The tangible elements that support service quality and build customer confidence.
Hello teacher, my name is Jairo Terrones, and according to Michael Porter's generic strategies, Interbank pursues a differentiation strategy. Instead of competing on low cost, they differentiate themselves by offering a superior modern user experience. Their core pillar is a digital first approach, migrating traditional transactions to their mobile app to increase efficiency. Furthermore, they leverage their parent company, Intercorp, to offer exclusive benefits across massive retail channels like Plaza Vea and Inca Pharma, making their financial products unique and highly accessible. Moving on to their human resource strategy, Interbank is widely recognized as one of the best companies to work for in Peru. Their strategy focuses heavily on employer branding. They recruit talent that aligns perfectly with their corporate values, especially innovations and sense of humor. Interbank offers personalized career development, meaning employees are co-responsible for their own growth backed by constant training. This internal environment is essential to support their digital transformation. To conclude, we can highlight three main points. First, there is a perfect synergy between Interbank cultures and its strategy. You cannot build a digital bank without an agile workforce. Second, their focus on digitalization makes them highly resilient against new vintage competitors. Finally, by investing in their people, they secure a motivated workforce that sustains long-term growth and excellent customer service. Thank you very much for your attention, teacher.